a lot of the people who undertake research and development at that stage have got no turnover. So it's very good for helping young businesses just starting off doing research and development to get some cash flow back into their businesses.
Welcome to the business behind your business. Conversations to help your business grow and thrive. Hi, I'm Paul Sweeney, founder of Pretium Solutions, Chartered Accountants and Certified Business Advisors, hosting the business behind your business. Welcome to the business behind your business. I'm your host, Paul Sweeney, Chartered Accountant and Business Advisor. And today we're looking at this question about research and development. Now, a lot of people start a business with the intention of solving a particular problem. And to solve that problem, there's a lot of research, product development that needs to happen before that stage, before they've got a product that they can sell. Now, that raises a few issues because how do you fund that research and development yourself, and what systems and processes do you need to put in place? So, as always, we like to get the experts in, and today I'm joined by Peter Towers, who's the Managing Director of ESS BizTools. Now, Peter's background is quite interesting and diverse, and starting, like myself, in an accounting firm, but where Peter's taken his journey and what he's been doing, and particularly with research and development and helping accountants, but also helping businesses directly access things like research and development grants and other grants, it is quite exciting. So let's welcome Peter to the microphone. Peter, it's great to have you with us.
Hi, Paul. How are you? Good morning, everyone.
Yeah, it's great to have you. Now, Peter, your story is quite interesting because you started as an accountant doing traditional accounting work, but why this interest in research and development or grants to help businesses grow? How did that come about?
Well, along the way, after I originally graduated, and I worked in an accounting firm for 3 years, and I then decided I wanted to get into commerce, and I joined a public company. And a few years later, I was the chief financial officer and company secretary of that company. That gave me a tremendous insight to what happens in businesses and the role of research and development in businesses. Big companies are doing it all the time, virtually every day. And so that was quite interesting. I then went back and started an accounting firm some 12 years later, and didn't want to just do income tax, to be honest. We did tax, of course, but we tried to run a commercial type business, which was a bit unheard of in those days. And that meant that we had to have a look at everything that was going on in the marketplace. And obviously that included things like research and development. Now, over the years, the government's support for research and development has increased significantly. And that gave me an insight into that area. In 2001, I was invited to submit an application to become a business advisor for AusIndustry for the COMET program, Commercialising Emerging Technology. There were only 10 other consultants in Australia involved in that project, and that was very interesting. And we started with people who had done some research and development, and the government was supplying money basically for us to help them become investment ready. So we hired consultants for them. I monitored those consultants, what they did, and basically we were preparing business plans, budgets, cash flow forecasts. And my role was to get the CEO or the managing director or the chair, whoever it happened to be. In some cases, we had all three of them in the room, to be able to confidently make an investment presentation and make sure they could do it in timeline. So that gave me a very good insight into what was going on in research and development land, and they are a different group of people. And incidentally, I always ask them, Paul, who is your accountant? And over 50, probably 60% claim they didn't have an accountant. They used to go up to someone to do tax returns. So they were not really in the sights, I wouldn't have thought, of a lot of accountants. And this is why I think accountants have got to continually to promote and market in a broader sense than just to your clients, that you're interested in doing these activities. And if you're a business person listening to this and you want to get some advice on these issues, well, ask your accountant, can they help you on research and development? And I hope they answer that they can. So that whole journey meant dealing with senior people in AusIndustry, going to Canberra a few times every year to have meetings. So I gained a very good insight as to how the government runs these grant programs and what AusIndustry's role is. So it's been an interesting.
And look, you mentioned when we were talking earlier about, I guess, was it the Financial Management Research Centre, which came out of the University of New England, and some of the systems and processes that they, well, I guess, developed to help business owners. How did you get involved with them?
Oh, it was an interesting story, actually. In, I think, about 1981 or 82, a guy called Dr. Jeff Meredith, who's now a retired professor at the Southern Cross University at Lismore, I understand, is where he now is. He won a scholarship from the two Australian accounting organisations. The CPAs used to be called the Australian Society of Accountants in those days, and the Institute of Chartered Accountants, to go around Australia and promote to accountants that accountants needed to be doing more work to help their clients run better businesses. Strange we're still on the same tack today, but that was 1981 or 82. And I met Jeff Meredith, and he told me about what he'd developed at the University of New England at Armidale. So later that year, my partner David Hart and I went to Armidale, and in June, so it was very, very brisk, and started my involvement with the Financial Management Research Centre. Now, the key presenter there was a guy called Andrew Geddes, who has become a close friend of mine over the years and my mentor. But what they were doing, it was basically presenting ideas and concepts and analysis to groups of accountants, probably 25 to 40 in a group, that accountancy really did involve. You learn a lot more at university than just doing a tax return. And that the SME clients were looking for support and in what they could do in their businesses. Having come out of, at that stage, having been in a public company environment, this was something that I was very enthusiastic for, because I'd really been planning to do something along those lines in any case. So we become very strong supporters of FMRC. Unfortunately, it hasn't survived to today because other people took over, and this was probably an era a bit before personal computers really hit, and it's now a lot easier to deliver these services. And Andrew Geddes, of course, went on to become a very well-known consultant to the accounting industry, and had a very long career as an advisor and then as a director and chairman of Green Cross Limited, which grew from being a one-person, one-nurse veterinary surgery in Townsville to become a top 200 ASX company. And Geddes was involved for the whole 30-year journey of that enterprise. So that's an exciting story in itself.
Yeah, it is. And look, I think you've touched on that frustration with traditional accounting just falls very short of helping business owners grow profitably, run better businesses, and access some of the tools that are available, and even understand the systems. I remember when I started accounting, a lot of these systems and tools were just out of the reach of your typical small business, but you're combining the access to the government incentives and programs to the systems and teaching people how to use them. So how does that work now? Because I think the research and development system or tax offset that we have in place now is very different to what you first started with back at AusIndustry. So what can you give us an overview of what the current system is and how it helps businesses?
Basically, it's available only for companies, which I think is a bit unfortunate, but it's only for companies. And there's a demarcation line at $20 million turnover. A lot of the people who undertake research and development at that stage have got no turnover. But the demarcation line's $20 million in turnover, so there's different support for under $20 million to what is available for over $20 million. Basically, there is a set process, which is very similar to the way the government perceives that universities operate. So you just don't widely go off and spend the money. The company needs to identify what their idea is and undertake some preliminary investigations. And they have to do some research into things like prior art. So there's some real jargon creeps into this. That frightens some people and it frightens some accountants, but I don't think it should. It's the rules that you need to undertake reasonable amounts of research. And today, of course, we've got the internet. This would have been very difficult prior to the internet, but you can search to see if someone else has already invented something. If they have, you can go ahead and do some more inventions on that if you want to, but the Australian government's not going to give you a taxation benefit for doing so. That's as blunt as I can put that. So the benefit is you get a 43.5% tax rebate if your turnover is under $20 million on the research and development expenditure that you've undertaken. And that is paid as a rebate of your taxation. So if you've spent $100,000 on research and development, you would get $43,500 off your taxation payment. But if you're one of those companies that are currently trading at a loss, when you incur this research and development activity, and if let's take that $43,500 rebate that I just mentioned that we were going to claim, if your losses in the year were $60,000, the tax office will pay that $43,500 to the company straight into their bank account within 30 days of the company lodging its tax return. So it's very good for helping young businesses just starting off doing research and development to get some cash flow back into their businesses. The only unfortunate part of it, I think, is that's only done once a year. So companies who are undertaking research and development normally are wanting their accountants to finalise their tax returns, by the second week of July if they can, so that they can get their tax return lodged and the application report that's got to go to AusIndustry into the system so that they can get a refund. Now, in actual practice, that works fairly well as long as you've supplied all the information. That refund is deposited into your bank account, your company's bank account, within about 30 days of lodging the tax return. So it's a good system. Some people are advocating that should happen, that payment could happen every quarter, but the government hasn't taken that idea on at this stage.
Yeah, so it's a great incentive. But again, you mentioned that key thing is that the payment comes after you lodge your tax return for the year. So you've got to spend the money up front. You've got to actually physically outlay it. So in terms of any research and development project, you need to work on your cash flow forecasts and actually secure some funding or have funding available before you commence any of that activity.
Yes, and there's no quick fix answer on that. The government has put in place a capital raising project that companies can undertake, and this is very popular for a significant number of people undertaking research and development. But it really comes at the end of a research and development phase, because that company is called an early stage innovation company. The company is able to go to the public to try to raise the capital, but you've got to have something tangible. I suspect in most cases it's got to be more than just an idea. It's got to be more than some lines on a piece of paper. So that really does present, Paul, the funding problems that people have got when they're doing research and development, because this is all in arrears.
So you need to have your plan in place demonstrating what your actual objective is with the research and development, and then actually be able to demonstrate, well, hang on, there's a market for the product we're going to develop. There's a need for it already, and this is how we're going to sell it. But to get to that point, we need to raise X $100,000 or X $1 million to affect that. But we've got this first step where we've got to come back to the beginning and say, well, hang on, we need to do this research and development. How are we going to fund it in the first place?
Yeah, you need to, as quickly as you possibly can, get your idea to a prototype type phase. Now, when I was involved in that government program for 11 years that I talked about, I saw some prototypes that changed dramatically from the time someone showed me what they what their preliminary research had enabled them to develop to what the final product was 12 months later. And that was because a group of people called designers got involved with things. Things have to look attractive. They have to be fit for purpose. There's a lot of changes can happen. I had some clients went through 3 or 4 final prototypes. They kept on telling me this is the final one, but we'd go to a focus group, and a focus group would look at things. I found ladies were very critical of anything that was going to go into a bathroom or a kitchen. And some people had to go away and change their whole prototype because it didn't fit or it would attract dirt or whatever. And this is why you have focus groups. So research and development is not something that should be rushed, but it should be planned in phases if possible to get as quickly as possible to a prototype, and that's what will create interest, and it might enable you to create some investors. Now, it mightn't be under early stage innovation company status at this stage. You might have just gone and got a normal company. It's a Section 708 company where you can have 20 shareholders and talk to some mates or family members and see if they might put in some money. This is what normally happens. And you might raise, $20,000 or $30,000 in that way to do that research, get your prototype finished, and then to seriously look at where you're headed. What's that going to cost you? And if you then find out that that's going to cost $500,000, that's when you could potentially start looking at an early stage innovation company capital raising to raise that $500,000.
So you mentioned the early stage innovation company. Are there some incentives to encourage people to invest in that type of company?
Yes, well, the incentives, the incentives, first of all, for the company are you're going to get the money, and that's the end of those incentives. But the incentives for the investors are unique in Australia, as far as I can work out, and I think they're great. And these were introduced by the Turnbull government out of the economic overview or forecast that they brought out in 2015 or 16 or something like in that era. And out of that come the concept of an early stage innovation company and crowdsource funding equity raising, which is another outstanding vehicle. So in early stage innovation company, the investors classified into 2 groups. We've got the sophisticated investors who are roughly people with net worth of over $2.5 million or have earned over, Paul, 250,000, I think, is it?
Yeah, 250,000. Yep.
Per annum for the last 2 years, who get a certificate signed by their accountant to say that they have that. And I understand now that that certificate also now includes a clause which basically says that the recipient of this certificate also has the necessary knowledge to be able to make investment decisions, or words to that effect and that's really to cover someone that goes out and wins lotto. Just because they've gone out and won $10 million doesn't mean that they understand all the intricacies of investing. If they're under the 2.5 million and under the sophisticated status, they're called retail investors. So a sophisticated investor receives a tax rebate of their investment of up to $200,000 calculated on 20% of their investment. So in other words, if they invest $1 million into a company, which some people do, they would get $200,000 tax rebate, which they are able to deduct off their taxation bills. And if they can't use it up in the next 12 months, they just carry forward the balance until it's actually used up. If it's a retail investor, they still get 20%, but the maximum investment a retail investor can make in an early stage innovation company is $50,000. So their rebate finishes at $10,000. The $50,000 limit is the government's attempt to make sure people are diversifying their investments. They're not putting it all into one company. The government's view is if you're a sophisticated investor, you're big enough to look after yourself. And what that really means is normally those people have got external advisors who will make recommendations as to whether $1 million is put into one company or not. But the government is protecting, in inverted commas, the retail investors. But the other big benefit for that category is that irrespective of your classification, sophisticated or retail, if you hold those shares for more than 12 months and less than 10 years, you don't pay capital gains tax when you sell those shares. So if you really have hit onto a winner and you're getting 20, 30, 40 times your investment back, it could be quite a bonanza not to have to pay capital gains tax in whatever future time. If you still own the shares in 10 years' time, the company is revalued at that date, and that becomes your new cost price for future capital gains tax calculations. So that's the benefits the government's brought in.
So that's an incredible incentive for somebody to invest in those early stage innovation companies. So if there's those incentives exist, as a business owner doing research and development, undertaking research and development, there's I guess a priority to make sure that we get to a point where we can make our company investment ready to attract those kind of investors, and that will then fund the future research and development and then the commercialization of our product.
That's right, Paul. And the other step that we probably missed out there is the grants. There's also a very significant grant in the middle of this. So the government's master plan was research and development would get supported the way I've just explained, but a company, basically when it gets to prototype, can also apply for a grant called Accelerating Commercialisation, which is the continuation of the grant that I referred to before, COMET, Commercialising Emerging Technology. Just they got a bit more money in it these days than what we had. But anyhow, that grant is up to $1 million on a 50% basis. So to get $1 million, you have got $2 million to spend or to part with between your prototype and making your first commercial sale, because that's the requirements, your first commercial sale. That doesn't say the first sale though. I've had clients who have made sales of product at 40% of the estimated selling price that an independent consultant, marketing consultant, has signed up on. It's the trigger is your full retail sale. So the problem in that grant is that the government's really only paying 50% of the costs that are estimated. Now, not everyone gets $1 million, of course. Some people are only getting 100, 150, 200 grand, but that means that they got 300,000, 500,000, whatever amount of work to do. Where do they get the balance from? The government's saying, well, we'll give you a grant for half. Where do you get the other half? And really what dovetails into that is early stage innovation company. So you can do an application to AusIndustry, or what is now called the Entrepreneurs Program, to get a pre-approval and then go off and raise your capital as early stage innovation company. And as long as you get that, they will then give you the Accelerating Commercialisation grant, and you've also got your early stage innovation company shareholding. It takes a few months to organise all this, so you do need assistance from your accountant, because there is documentation that obviously has to go to investors. They just won't write a check out. They need to see the story, and they need to see conclusive evidence that your company has qualified as an early stage innovation company, because they want to hand over the money with an assurance that they're going to receive the taxation benefits.
And how do you get approval to be an early stage innovation company? Is there an application you need to make, or is it a self-assessed process?
Well, you need to do a self-assessment process first of all, because there's three main entry requirements. The first one is the company. This is aimed at young companies, not young people, but young companies. So turnover under 3 years of age is the main category. Some entities can be admitted with their age is up to 6 years of age, but there's a few more steps to go through with those ones. The turnover has to be under $1 million in the previous 12 months for the company, and the income has to be under $200,000 in the previous 12 months. But the income doesn't include an Accelerating Commercialisation grant. So as long as you meet that, you've then got to go through one of two other tests. The gateway test is 10 questions that you earn points for that are specified, and you've got to earn over 100 points. Now, not every company that's going to get this um, green light to be an early stage innovation company can get the required 100 points, because you normally need to have been in operation for nearly the full 3 years to get that. Because it's based on your research and development activities, whether you've already raised over $50,000 from arm's length investors, and a few other things. The second test, so if you don't pass the gateway test, you can then go on to what's called the principles test. The principles test has got 5 questions, and you need to supply answers. I tell people, in my experience, the minimum is an A4 page for each question, but I've had one client that I think we submitted in some answers 20 odd pages to one question, because they're looking for how this business is going to operate. Now, this is a lot newer company. Most of them are only 6 months old that are doing this, and that's why they're not able to go through the gateway test. Now, what happens after that? If you have self-assessed under the gateway test, because it's specific questions. What R&D have you undertaken? How much have you spent as a percentage of your total expenditure? And if it's over 50%, you earn 75 points. You've only got to get 100. Have you been admitted to the Accelerating Commercialisation Program? If you've answered yes, and you got the proof for that, as you got the proof from your research and development expenditure, you earn 75 points. So you've already got 150. You don't have to do any. In fact, the tax office don't want you to do anything else at that stage. You document that, and that's in our system that we've developed within ESS BizTools. Our subscribers have got a complete due diligence check kit that they would then produce a report, but that report is basically going to go to the potential investors, because they're the ones that have got to be satisfied that you've passed this test, so that if they invest, they're going to get their 20% tax rebate. The people who go through the principles test, though, have to submit a due diligence report to the tax office, and the tax office send a copy of it to AusIndustry, where they've got a specialist team, and they assess it and give it an answer back in about 6 weeks. And they then issue a certificate which says, yes, we're satisfied that XYZ Proprietary Limited satisfies the requirements to be an early stage innovation company. That is the window of opportunity then that the company has. You haven't got a year to sit on that. You then got to move to talk to potential investors. It basically runs to the end of that financial year, unless the tax office extend it. There may be reasons they will extend it, but the company is then meant to act on it before things change in the marketplace as per that company. So you then present that documentation. If you're approved under the principles test, that's the letter from the ATO, to the investors. The investors probably will want to send that to their accountants and perhaps their lawyers to get advice on. Some of them mightn't really know much about this, although I found quite a number of investors do know it's out there, because they're looking for that sort of opportunity. And it's a great way for one of our SME listeners on this podcast, Paul, to understand how they can finance these sort of ventures. And many accountants, and I know you, Paul, can help them go through this process.
Yeah, and look, I think it's a process where you do need help, but I think one of the things we touched on is it's not purely the realm of the large accounting firms or the R&D specialists. Like your accountant or your business advisor should be well placed to help you in this process, not
That's
just
right.
with the grant application or the putting the tax documentation together, but in terms of helping you develop the business plan, the cash flow forecast, the documentation to go to satisfy your requirements for the research and development, to apply for the accelerating commercialization, to get in place your early stage innovation company status. Working with your advisor is I think essential, because when you're doing the research and development, you don't want to be spending the time learning how to do it. You want I think you want to spend all your energy or your best energy in actually doing your research and development and growing that business rather than worrying about the paperwork side of it.
That's right. That's right.
Yeah. So working with your advisors, look, if you are new to this space as an advisor or an accountant and you want to get in touch, we'll leave Peter's contact details in the show notes, and Peter be, I'm sure, excited to talk to you about how you can
thank you.
help your SME clients. But if you are an SME and you're looking for advice, then we'll also put a link to where you can take the next steps on what you could be doing to access some of these programs. Because I've spoken to business groups before, and of all the grants that are available, most of them are only aware of like 2 or 3, and they're aware of R&D, research and development, but they don't know how to access it. They don't know. They've thought it was sort of, I guess, out of their reach, that it's not accessible. But I think the minimum spending for research and development tax offset is that $20,000 or?
Yeah.
Yeah.
Which is, if you're doing research and development, they soon go past that. But there's some tricks that people need to remember, Paul, and I'm sure you've come across this. If I've had people ring me and say, "Oh yeah, we've worked on this for 3 years, and I've put in $150,000 of my own time." My question then is, have you paid yourself? Have you issued a PAYG tax certificate? And the answer is, unfortunately, in many cases, is no, and therefore you can't claim it. It's actually you can claim your own wages if you've documented what you're doing on the project, but you need to actually pay yourself with dollars and then issue a is that what the current title is? PAYGT certificate that you've made those payments.
Mm. And I think the other thing you mentioned there, Peter, is that not all, or you implied that not all expenditure is actually eligible for the research and development offset. So needing to identify what is and isn't eligible expenditure is important. And again, talk to your accountant and advisor to get some assistance with that.
Yes, Paul, it needs to be documented. I've acted for clients that are claiming over $1 million in the research and development, but you need to document it. And it's really dotting I's and crossing T's and making sure. So it's time records. If you've got people, but even yourself, if you're claiming, if you're just a company director running a small company, and you're doing the research and development, as long as you're paying yourself as an employee of that company, that's the first step. The second step is that you have then kept appropriate records of the time that you have spent on the project. A director just spending time having a bit of a browse as to what's going on is not claimable. It's got to be research activities. But you can have team members who might be spending 60, 70, 80% of their time on research and development, as long as that's been documented. But I also really like that the team member has written down what they have done. If people need, I'll rephrase what I was going to say, people need to realize that research and development is done on the self-assessment basis. And that basically means, what is it, Paul? 2, 3, 4 years' time might be the time that you receive a phone call from the tax office that they want to check the records. They're not checking it straight away. They accept what you tell them at first. They will actually issue the taxation benefits, but then it might be in 3 or 4 years' time that they're following up doing review work. And you need to have the documents. That very important employee that you've got working on your R&D project now might be back in England by then. They might have been a student or a backpacker or someone that's been working in Australia. And if there's an argument as to what they were doing on the project, it's best to have it all and recorded so that hopefully you can answer any inquiries that you receive from the tax office.
Mm. Yeah, I think I paraphrase my Spider-Man clause on there, where it's with much government incentives and money, there is much documentation and legislation to follow. So,
yeah, well, they've got their role, and I'm sure at times we've all queried their role and how they go about it. But they have got a role to protect the public purse. So it's taxpayers' money, and it needs to be spent wisely and appropriately. And so their role is to make sure that happens. And when they make those inquiries, might not suit the company itself, who might think that as soon as they lodge the tax return, all these things are approved. They're not, and people need to realise that. And keeping the records is very important, I think.
So Peter, just to recap, we've got some great incentives and programs that are available to help small and medium businesses in Australia, undertake research and development and raise funding to support that process. Is there anything you'd like to say to just encourage people to take up those programs?
Well, I think the government, the federal government, is very keen for Australian businesses to be inventing things. And if you follow what's going on in the financial news in Australia, you will have noticed that there's been a number of Australian startup companies become very valuable over the last 5-10 years. That's the benefit from some of these programs. Now, I think we're still a long way behind some other countries around the world, but some of our valuations lately have been quite spectacular. So that's the big end, but there's plenty of people at the middle and lower end of business activities who are also doing very well out of their research and development activities. In the first place, many of them are doing things easier or more efficiently within their own businesses. That's the benefit of it. But others have developed intellectual property which they can then sell or license to someone else, somewhere else in the world. Now, you're going to need experts like patent attorneys and commercial lawyers to help you on that journey, but some people do it very successfully. When I was involved in that COMET program, I come across an inventor who had about 30 patents and all sorts of products. And that was his business. He would invent ideas. He'd look at problems in particular industries. He was an engineer by profession. And he would then go out and do the research and development. So he was claiming the research and development through his company. And then he would look to license that new technology developed to people all over the world. He had a very successful business. And the 2 or 3 people who worked for him were only doing research. They weren't doing anything else. They had no ongoing primary business other than being researchers. So, interesting.
So, again, I think it's not just not just there for the bigger companies. It's there for everyday small, medium business owners, but you do need to understand the rules, work with your accountant, work with your advisor, and get things set up correctly so that you can maximize the benefits that you get from these programs.
Yes, I'd agree with that, Paul. Yeah.
Yeah, great. Fantastic. Well, Peter, as always, it's been a pleasure talking to you. A wealth of knowledge on these topics, and I always come away learning something new whenever I talk to you. So thank you for your time. If our listeners want to get in touch with you, we're going to leave your contact details in the show notes, and they can reach out to you, or they can reach out to me if they want some assistance with putting together their R&D project. But again, thank you for joining us, and we'd love to have you back on the podcast at a future date to talk about some of the other programs that you're involved with.
Okay. Thanks very much, Paul. Thank you very much, everyone. Talk to you later.
Thanks for listening. Do you have a question you'd like our team of experts to answer? If you do, send your question to podcast@thebusinessbehindyourbusiness.com. To hear more from The Business Behind Your Business, don't forget to subscribe using your favourite podcast player. Or you can visit the businessbehindyourbusiness.com website.